Welcome to the third session on the consignment. Okay, now what are here with this introduction and all there. Now we are focusing here more on. Okay, just a minute. We'll take it to the edit. Now, okay, introduction. This all we have already covered. Consignment, stock valuation, and accounting treatment. This will be our main agenda. Even we will be discussing about abnormal loss. Okay, or we can say we will be we will be discussing about losses on consignment. Okay, next. Now consignment losses. Now consignment losses are broadly divided into two parts. One is normal loss and the other one is abnormal loss. Okay, so now question arises, sir, what is normal loss? Okay, now there will be certain losses which cannot be avoided. Remember, cannot be avoided. Like, we can't avoid the evaporation of petrol. Sometime leakage is considered as normal loss because it is inevitable. Okay, so normal loss occurs due to inherent characteristics of goods. We need to remember that. It is due to inherent characteristics of goods. It's included in the cost of goods sold and the closing stock. Now question arises, sir, what is this? See, it is included in the cost. What is meant by this? That means, or I will make it very simple, this can be recovered from customers. This can be recovered from customers. Okay, now why? Because it cannot be avoided. We are not responsible. So if we are not responsible, and and one more thing here, what we need to observe is, one thing is we are not responsible, and another thing is it is unavoidable. So whatever goods are coming to me, it is after these losses. So to bring these goods, I have already suffered loss that I can recover from. If not me, any other person, he would have also faced the same loss. So that's why it is included in the cost of goods. How it is included, sir? For example, assume that I have ordered, or I will be I have ordered for 1 lakh liters of diesel. Okay, from Mangalore port. When the cost of this was 10 lakh, assume. इतना सस्ता नहीं है फिर भी, हाँ, 10 lakh. Okay, so but when it reached me, it was just 90,000. It was just 90,000 liters, because it is due to evaporation. 10,000 liters were lost in the transit. Now earlier, if you see, the cost per liter was 10 rupees. On the basis of this, if I would have charged 20% profit, I would have sold at 12 rupees per liter. But now, but the thing is, what has reached to me is 90,000 liter. For that, how much it costed me? 10 lakh. Now what will we do is, to get the revised pricing, the 10 lakh rupees will be divided by 90,000. Somewhere we get around 11 point, and on that the profit will be charged, and my price will be somewhere close to 13. That is, we have recovered the normal loss from the good diesel, or we can say the diesel which reached us. That's why it is very famously said that normal loss can be recovered from good units. Remember this one. Normal loss can be recovered from good units. Okay, now next. Abnormal loss occurs due to accidents. That means it involves negligence, it involves human interference. Due to that, and these losses could have been avoided, but we could not. Abnormal loss occurs due to accidents. It is credited to the consignment account to calculate the actual profitability. Remember, how to remember the abnormal loss? Remember, it is due to negligence, human interference. It cannot be recovered. Remember, normal loss cannot be recovered from customers because customer says, "Arey yaar, it is because of your negligence. Why I should pay for your negligence? So no, I will not be paying." Okay. Now, how to calculate the losses? Okay. Now, first coming to this normal loss. Sorry, abnormal loss. No, I will later on share the format for that. Normal loss is calculated by inflating the rate per unit. That's what I shown you earlier, right? In the last slide. And deducted from the goods. That means goods, you see in the last example that 1 lakh liter got reduced to 90,000 liters, and the cost price earlier 10 become earlier the next 11. That's what it is said. Inflating the rate per unit and deducted from the total goods. Clear? Now, format for calculation of abnormal loss. Very easy. First, you need to take cost price of the goods lost. For example, in the previous, for example, let us understand A, the consigner, sent to B, the consignee, 1,000 calculators. Out of that, 200 were stolen. That means, what is the cost price of the goods lost? 200. And price of the calculator should be taken. For example, 100 rupees is the cost price. Then this will be 20,000. Okay. Now the question arises where this thing has happened. If it is in the transit, if it is in the transit, that means consigner will not be incurring any expenses for that because these 200 have not reached them. How much have reached to him? 800. So that's why if the goods are lost in transit, only the proportionate TNRE of the consigner will be added and consignee will not be added. Consignee will be added when the goods are lost in the godown. For example, if the same goods were stolen in the godown, then the proportionate TNRE of consigner and consignee, sorry, it has to be consignee, it has been mistyped. Okay, consignee, both will be added. Okay, now next is, what's next? Now, sir, what is you are speaking a line that is called as proportionate TNRE. What is mean by proportionate TNRE? Let me tell you what is proportionate TNRE. For example, if total TNRE is 10,000, then proportionate TNRE will be 10,000 is for 1,000 units, but my loss is only 200. Okay, so now that's why it will be 200 divided by 1,000. So here two zeros will be cancelled. It will be 2 by 10. I think somewhere it will be close to 2,000 rupees. Now that I will take here. Now if goods are lost in the go down, I will add this also, and ultimately whatever value we receive, that is called as value of abnormal loss. Okay, now next, consignment stock valuation. Okay, now here also what we take is the cost price or invoice price we will take, and then we will take proportionate non-recurring expenses, and then we determine the value of the closing stock. Okay, now let's see how to do it. Now first what we need to remember is the always the universal method of valuation of closing stock is, we need to remember this, lower of cost price, or we call it as net realizable value ಅಂತೀವಿ ಇಲ್ಲಿ. ಏನಂತೀವಿ net realizable value. Okay, now we will be determining here cost price. Okay, ನಮಗೆಲ್ಲ ಎಕ್ಸಾಮ್ನಲ್ಲಿ ಅದೇ ಕೇಳಿರ್ತಾರೆ, ಏನಂದರೆ ಕಾಸ್ಟ್ ಪ್ರೈಸ್ ಆಫ್ ದ ಕ್ಲೋಸಿಂಗ್ ಸ್ಟಾಕ್ ನಾವು ಕಂಡು ಹಿಡಿಬೇಕು, ಅಥವಾ ಇನ್ವಾಯ್ಸ್ ಪ್ರೈಸ್ ಆಫ್ ದ ಕ್ಲೋಸಿಂಗ್ ಸ್ಟಾಕ್ ನಾವು ಕಂಡು ಹಿಡಿತೀವಿ. ಬಟ್ ಇಲ್ಲಿ ಕಾಸ್ಟ್ ಪ್ರೈಸೇ ನಾವು ಯೂಸ್ ಮಾಡೋದು, ರೈಟ್? ಸೊ ಕಾಸ್ಟ್ ಪ್ರೈಸನ್ನು ನಾವು ಕಂಡು ಹಿಡಿದ ನಂತರ that has to be compared with the NRV. Whichever is less, that will be considered as value of closing stock. Okay, now what are the factors affecting the closing stock? Remember, TNRE, that is total non-recurring expenses. Idenre normal loss. What we need to remember is normal loss only quantity will affect. Then next comes abnormal loss, human interference, quantity and amount both will affect. Next, now if there is no normal loss, how closing stock will be valued? First it will be cost price of the closing stock, whatever amount is remaining. For example, if there are 1000 units, 200 are lost in the midway, and you have sold 700 units, then how much is remaining? 100. 100 will become your closing stock. Clear? 100, I assume the price of the stock as 100. Add a proportionate non-recurring expenses. We saw that the total non-recurring expenses were 10,000. We assumed it into 100 divided by 1000. So how much it will be? It will be 1000. Then proportionate non-recurring expenses of consignee. Assume he has incurred 5,000 rupees, or let me assume that he has incurred 8,000 rupees expenses. Then out of that closing stock is 100, but it will not be divided by 1000, it will be divided by 800, because out of the 1,000, 200 were lost. So how much have reached to them? 800. So that's why again this will also be 1000. So the value of the closing stock will be 12,000. So this is how we do it. Now what happens if the normal loss exists? Only thing is that the same thing we will be doing, but now here there will not be proportion. Okay, we will follow this format. Okay, and once we get this complete this format, whatever we get, that will be called as UOGS or COGS, that is units of goods sold or the cost of goods sold. Okay, units of goods sold or cost of goods sold, this is called as units of goods sold, and this is called as cost of goods sold. Okay, then the value of closing stock will be determined by COGS. I will make it as cost of goods available for sale, and this is units of goods available for sale. Okay, now uh, after doing all this calculation, it will be COGAS divided by UOGAS, that is cost of goods sold available for cost of goods available for sale divided by units of goods available for sale multiplied by closing stock units. Now question arises, sir, how to ascertain this closing stock units, or we call it as closing stock quantity. First, quantity sent should be taken minus quantity returned minus quantity sold minus quantity of normal loss minus quantity of abnormal loss. So if you do this, then you will get closing stock units. Okay. Now here what you need to remember is, I said normal loss only units will be considered and not the amount. Okay. Now hope you are clear with it. Valuation of closing stock. Now this was all regarding closing stock units. Now next we come to accounting treatment. So whatever we get here, that will be the value of closing stock. Okay. Any doubts in this? I think there will be no. Okay. Now accounting treatment. See, I have directly I have come to ledger because the journal will be the like the ledger is derived from journal only. For example, when you have written consignment to goods sent on consignment, it will be taken here in the ledger account. Now, whenever you pay any expenses, see, you pass the journal entry expenses account debit to cash. But now, here everything is recorded in the consignment account. So these expenses and incomes are debited with what? The term consignment, and credited with the term consignment. So expenses debited, income credited. So instead of expenses to cash, what we write? Consignment account debit to cash account. Then now we have consignee has incurred some expenses, but we need to pay him. So he becomes a liability for us. So the journal entry will be consignment account debit to consignee's account, because we need to refund him, because all the expenses which are incurred by the consignee are borne by the consignor. Next, to bills receivable, this is when there is a discount on bills of bill. When the bill is discounted, the discount amount, when it is treated as consignment expenses, then it will appear here. Then commission to consignee, types of commissions are there, all should be listed here. Ordinary commission, del creditor commission, overriding commission. Then when del creditor commission is not given, bad debt will be borne by the consignor. Remember, these accounts you are preparing, the consignment account is prepared in the books of consignor. Okay, for every consignment transaction he will be having account. For example, if he is sending consignment to Bijapur, consignment to Bijapur account will be there. If he is having some consignment to Kalburgi, it will be consignment to Kalburgi account will be there. If he is sending consignment to Ballari also, then consignment to Ballari account will be there. Okay, then now this is in case of loss. I will come to this. We will treat a bit different this one. Then this also, that is abnormal loss part. Okay, now I will come to this when we will solve the problems. Now by consignee account, this is for the sales, this is for the sales or purchase by the consignee. Okay, this is not part of your syllabus. I made it exhaustive, right? But this is not part of your syllabus. Then by consignment stock. Okay, and whenever we do under IP method, which method? IP method. At that time, transactions are recorded. Remember, if I explained this here, CP plus loading was here. There's something. Huh. Okay. Now, let me come to this. Now, I said CP plus loading is equal to IP. Even you can say L is equal to IP minus CP, or CP is equal to IP minus L. Same equation interpreted in three different ways. Okay. Now, on the cost price method, remember all the transactions have to be entered at cost price. There is no doubt. But sometime to hide the profit element, he will be sending them at the invoice price. At that time, transactions like, I will mark here with the red ink so that you understand. Goods sent on consignment. Okay. Closing stock. Okay. And if any returns are there, that will be by goods sent on consignment. Even that, normally there will not be opening stock, but if any opening stock is there, even that will be considered. These four elements will be recorded at IP, that is invoice price. We will be recording them at invoice price. So when we record them at invoice price, in order to bring back them to the cost price, we need to make certain arrangements. For example, when I record consignment stock here, that is the closing stock. See, you can say if it is at the cost price, fine, no issue at all. But if it is at the invoice price, the loading has to be removed out of it on the opposite side. So that's why we write here to stock reserve. See, if closing stock is recorded at invoice price. Clear? For example, I will tell you, if the cost price of the closing stock is 10,000, profit involved in it is 2,000, so total is 12,000. The closing stock has to be recorded at cost or market value, whichever is less. So if it is recorded at 10K, fine, no doubt, no problem at all. But if it is recorded at 12K, 2K should be removed from that, so that again it becomes to 10,000. Clear? Now, this was all about the format of consignment account in the books of consigner. Remember, on the debit side, what all we take? First, two goods sent on consignment, whatever amount of goods we have sent, and if it is returned, it will be taken on the credit side. Okay, then paid by consignment expenses paid by the consigner, cash certainly go out. It has to be it has to be credited, debited to consignment account, but ಅದು credit ಆಗಿರ್ತದ್ರಿ. Okay, then if something has been spent by the consignee for which we need to refund, that is consignee to consignee account. If any discount, two bills receivable. Okay, then consignment commission. See, commission again due to whom? The consignee. That's why it will be to consignee account. And if any bad debt loss is there, we need to refund, because we are the owner, we need to refund that to the consignee. That's why if we pay dull creditor commission, this is not required. Okay, then if there is any closing stock recorded at IP, then stock reserve will appear here. Okay, now next is goods sent on consignment. See, that's what I said. If this is recorded here, the loading on this will be there if it is recorded at IP, otherwise not required. This is regarding abnormal loss. We will come to that later. Okay, then sales. Then next comes stock reserve. We have already consignment stock and stock reserve we have already seen. See, if the goods are returned here, even loading will be recorded on this side. Okay, then next is After doing all these things, there will be either profit or loss. This profit or loss will be transferred to general profit and loss account. Remember, what is general profit and loss account? See, it is not just consignment business. An entity will be having numerous transactions. So the consignment transactions will be merged with other transactions in the general P&L account. Clear? Okay. Now, in the books of consignee account, see what is receivable from his. He is doing sales on behalf of us. We need to receive money from him. That will appear here. Now, before doing that, what he will be doing, if he has paid any advance, he will be deducting. Okay, either through bill or through cash. If he has made any expenses on behalf of us, those expenses he will be deducting. Then, if he has to receive any commission, that he will deduct. If he has suffered any bad debts loss which we need to compensate, ಅಂದರೆ ನಾವು ಕೊಡಬೇಕಾಗಿರೋದೇನಾದರೂ ಇದ್ದರೆ ಅದನ್ನು ಕೂಡ ಅವರು ಡಿಡಕ್ಟ್ ಮಾಡ್ಕೋತಾನೆ. ಸೊ ರಿಮೆಂಬರ್, this side what we need to receive from him, this side what we need to pay him. Okay, so ultimately whatever comes to whatever balance will be there, that will be either by cash account, whatever, like if he is making payment, then we will write it as by cash, and that amount he has to make payment, or it will be balance carried down. Now, what is goods sent on consignment? Now I will tell you, if the goods are sent on consignment, the whatever entry you have passed here, that is two goods sent on consignment and buy goods sent on consignment, these two will appear here. See, the first one is this one. Okay, the same which we recorded consignment ನಲ್ಲಿ two goods sent on consignment ಮಾಡಿದೆವಲ್ಲ, ಅದು ಇಲ್ಲೇನು ಬರುತ್ತೆ, ಬೈ goods sent on, ಸಾರಿ ಬೈ ಕನ್ಸೈನ್ಮೆಂಟ್ ಅಕೌಂಟ್ ಅಂತ ಬರುತ್ತೆ. ಇಫ್ ಇಟ್ ಈಸ್ ರೆಕಾರ್ಡೆಡ್ ಎಟ್ ಐ ಪಿ ಇದು ಬರುತ್ತೆ. ಓಕೆ, ಆ್ಯಂಡ್ ರಿಟರ್ನ್ಸ್ ಏನಾದರೂ ಇದ್ದರೆ ಇಲ್ಲಿ ಫಸ್ಟ್ ಬರೀತೀವಿ ಟು ಗೂಡ್ಸ್ ಸೆಂಟ್ ಆನ್ ಕನ್ಸೈನ್ಮೆಂಟ್. ಸಾರಿ, ಐಮ್ ಸಾರಿ. ಓಕೆ, ವಿ ರೈಟ್ ಹಿಯರ್ we write here to consignment account. It will be at, if it is at IP, then here again we write by consignment account to remove the loading. Okay, then next. Now we are done with the books of consignor. Normally that is asked in the examination. And now coming to in the books of consignee. Okay, he will be preparing consignor's account. See, he need to pay the consignor for the sales. It will be exactly opposite. Then credit sales, cash sales, whatever is there. Okay, now if any advances are received from him, two bills payable, he will record it as, okay, two bills payable, because for us it was receivable, but now for him it is bills payable, paid in cash. Any expenses he has paid, that he will deduct. If any commission is due, okay, and bad debt, you can say this is the opposite of what ಕನ್ಸೈನರ್ಸ್ ಇನ್ ಕನ್ಸೈನರ್ಸ್ ಬುಕ್ನಲ್ಲಿ ನಾವೇನು ಕನ್ಸೈನಿ ಅಕೌಂಟ್ ಮಾಡಿದ್ದೀವಲ್ಲ ಅದರದ್ದು ಆಪೋಸಿಟ್ ಇದು ಆಗತ್ತೆ ರೀ. ಬಿಕಾಸ್ ಅವನಿಗೆ ಏನು ರಿಸೀವೇಬಲ್ ಇರ್ತದಲ್ರಿ ಅದು ಇವನಿಗೆ ಲಾಸ್ಟಿಗೆ ಏನಾಗ್ತದೆ ರೀ, ಪೇಯಬಲ್ ಆಗ್ತದೆ. ದ್ಯಾಟ್ ಈಸ್ ದ ಕಾನ್ಸೆಪ್ಟ್ ಬಿಹೈಂಡ್ ಇಟ್. ಓಕೆ, ನೆಕ್ಸ್ಟ್. ಸೊ ಥ್ಯಾಂಕ್ ಯು. ಇನ್ ದ ನೆಕ್ಸ್ಟ್ ಕ್ಲಾಸ್ ವಿ ಸ್ಟಾರ್ಟ್ ವಿತ್ ಪ್ರಾಬ್ಲಮ್ಸ್. ಓಕೆ.